Welcome back, everyone. My name is Michael LeBlanc, and you're attending our live weekly global economic and outlook and market update on June 2nd. Thank you for everyone attending, and those of you who are watching the recorded version, thank you for being loyal and watching every week. If you would like to watch a replay or forward this on to anybody, you can do so through our YouTube links you can find on our webpage, or just reach out to us. We're happy to send that to you. As I mentioned, I'm Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and we're going to talk about what's going on this week and what went on last week in the markets and the global economy. As always, these videos are for information purposes, not to be taken as advice. Always seek advice of a professional advisor, or do your own due diligence before implementing any strategies or implementing anything based on the content here. And we do try to keep the information as update as possible and as accurate as possible. But of course, things are always changing, so always double check either with us or on your own to make sure that you're taking actions on the appropriate information. As always, we're using our Zoom platform. Everyone's mics and cameras are muted, so you don't have to worry about that. Don't worry about background noise. Enjoy your coffee, enjoy your lunch. It won't affect anything here. You can ask questions. You have a little Q&A box there. Just click on that, and you can type in any question, and we'll try to get to it either live today if we have time. If not, we will always follow up with you. And if you have questions while watching a recorded version of this or afterwards, always you can email us at our email, mleblanc@cgf.com, or you can just go to mikeonmoney.com and it'll take you right to a contact page that you can reach out to us. So let's dive in. Before we jump into what went on last week and where we're at with the economy, I just thought I would address what's going on in the U.S. and around the world right now with the situation of the protests. Obviously, very tragic events that have led up to this. Although, the most recent event of George Floyd. Which is a horrible story if you followed it and seen the videos, but also it's obviously something that has been going on and been building up for some time, and there's obviously a lot of warranted frustration in the communities out there, and we just want to send, of course, our best and our thoughts to everyone affected, and we hope that much like COVID, that we'll see positive change that has been a long time coming. But I just wanted to address that. Obviously, we're following it from a news and a market perspective, but obviously from a personal perspective, it's difficult to watch this happen all around the world, as the whole world should be aware and addressing these issues. So with that said, if you'd like more information of our thoughts on how these things might affect the markets, again, reach out, but it's unfolding every day, and Trump is talking on the Rose Garden today, which I'm sure he's going to get a lot of questions about it, although his topic was to talk about China and not the protests that are going on. So let's dive in to what we're looking at for this week and last week. This week, we're looking at some more economic numbers coming out, specifically the manufacturing numbers. Obviously, they're going to be down. Really, what we're looking for is seeing the full impact, or the impact that we've seen so far on those, especially with the reopening starting. We're also going to see some numbers on construction spending, so this will lead into the housing market, the new starts. Global manufacturing, which we'll dive a little bit into China's numbers that are a little further ahead than North Americans. And of course, the Federal Reserve governors are having a closed meeting this week. So that's what we're looking at on the economic news this week. As far as the coronavirus goes, obviously the concern of a second wave is growing, especially with the protests. More and more people in close contact. and it could definitely have a impact on any gains or confidence that we have in the markets right now. As I mentioned, George Floyd's death is causing more and more protests and larger groups congregating. And although we're seeing a lot of masks being worn at those events, the nature of the event is not exactly social distance, so it'll be very difficult to contain if that continues. Retailers and restaurants who are experiencing damage during the protests, obviously very difficult as they're just starting to reopen. They've already gone through a difficult time. It's definitely going to slow the reopening process. And a lot of them are already struggling with the limited capacity issues. So we're probably going to see a bit more delay on that as that situation unfolds. Meat plants have started to reopen. All of the pricing of the beef and burgers continue to stay pricey as they were driven up due to the limited demand. So we'll keep a close eye on that to see. There is a glut of supply of raw material, but it's just the processing. Again, they're reopening, but on a limited capacity as they try to create more space between the workers and the production process. Voting by mail obviously is going to be very very tested during the November election in the United States, with the president taking a harsh stance against it, although it has existed for decades. I believe the longest I heard was 1807. It's been around. Some states it's standard, other states it's only by absentee, and some absentee is by request, and others you must have a reason. And some states are fairly strict on the reason, and some states, I believe there's 7 of them or thereabouts, that are saying that they won't accept COVID as a valid excuse for an absentee mail ballot. So we're going to see a lot more around this. We'll talk a little bit about the U.S. government, specifically Trump's battle with social media or Twitter over this issue. This is going to be an ongoing thing we're going to be watching for, and probably going to increase as we get closer and closer to the election, because if we do go to a second wave, or even in the current situation, obviously packing people into the polls is not going to go well, not just for voters who have to social distance, but think of the people working those polls, their interaction with hundreds and hundreds of people all day during the election. If we do see more and more voting by mail, one thing to keep in mind that we'll also have to deal with the U.S. election is we're probably not going to get the live results that we've grown accustomed to over the last decade, as many of the votes will be have to be counted manually and checked, of course, for signature, for validity, and that may take 2 or 3 days beyond the normal count. So those are all things we're looking at with the issues around the mail vote, or the mail voting by mail. Sorry. China, as I mentioned, has just kind of begun their reopening, and they're already showing signs of stalling. A lot of this is due to exports, so other countries that are still in shutdown or just starting to come out of shutdown, such like North America. And, the orders aren't there for the supply chain, for the manufacturing side of things. So although they are reopening and they do have capacity, the orders just aren't there. So that initial surge that they saw in orders from pent-up demand is slowing down. We're probably going to see a lot of this across a lot of sectors where there's a pent-up demand. We're going to see a sudden surge as things reopen, but then things taper off. All reports and all statistics that we're seeing is people are changing their behavior through this, not just in their social interactions, but their spending habits. A lot of studies are showing that people are indicating, at least so far, that eating out isn't going to be as big of a big part of their social their social interactions as it used to be. We're getting people working from home more. That means less people coming into the city, less driving. So there's going to be a lot of change after very likely a sudden surge of that pent-up demand, and then things tapering off. And that's what we're seeing in China. So we're going to continue to monitor that here in North America just to see how people shift their behaviors coming out of this COVID situation. Other insights from the analysis, of course, there's as I mentioned, Trump's kind of battle with Twitter. If you haven't followed that, Twitter has started to fact check, would be the easiest way to say, some of his tweets, and he did an executive order. Basically, the executive order was introducing that no social media company could be held liable for anything that was put on their platforms. Obviously, that's not a law through Congress or the Senate, so there's a lot of legal experts saying that actually doesn't absolve them anything, and that doesn't necessarily change how these platforms are dealing with what they're calling misinformation. So it's happened a couple of times now. We're going to have to see how that plays out as Trump is talking about taking it to to Congress and Senate for laws to be put in place. Also on the U.S. front, CEOs, believe it or not, some of the CEOs have shielded. Sorry, some of the firms have shielded their CEOs' pay in lieu of letting go of employees. So we've seen Sonic Automotive lay off and furlough a third of their workforce in order to protect the pay package for executives. Obviously not good optics and maybe not even good business, but companies can either build goodwill through these situations or bad will. So and believe it or not, quality of management goes a lot into our analysis of a company's health, and so we'll be keeping an eye on how the executives deal with this. We've seen some companies, of course, the executives take pay cuts or forego bonuses or stock options, like Sonic. They issued more stock options to the execs in order to actually keep more people employed during all this, and that shows strong governance of the companies and social responsibility. And if you missed, we had a video a couple weeks ago on social responsible investing, or ESG, which is environmental, social, and governance. And governance is a big part of what we look at for in companies. So keep that in mind when we talk about recommendations. We're always looking at that. And despite the rally in 2020, the experts are saying that we could have one of the worst markets for the year. Not surprising. And keep in mind, like previous videos, when we talk about negativity in the markets, there's kind of three layers. There's the overall market, where we can easily see negativity because that's taken into account all sectors or all industries, and things like the airlines and travel and retail, which have been hit very hard. It's going to be very hard for them to come back in 2020, so they're going to drag down part of the market. But there's also other areas like we've also talked about, like technology, your utilities, your main consumer staples, that have continued to have revenue through this, although some disruption, but recovering much quicker. That side of things might do well. But so there are areas to benefit during 2020 during these types of recessions. But overall, we're probably going to see a negative market. And then the third layer, as I mentioned, is the economy as a whole. And that's where we talk about unemployment, people's spending habits, the housing market. All those things would fall into the overall economy. So when you hear news around the markets, that doesn't necessarily mean what you should expect out of your portfolio or what you're going to see in your portfolio. That's where we take these deeper dives. Other headlines. Hong Kong and China obviously widened their wedge with China. As I mentioned last week, China passed some more restrictive laws over Hong Kong, and the U.S., of course, is already in difficult trade discussions with China, to say the least, but have downgraded their relations with Hong Kong over the recent move, which of course puts a bigger wedge between them and China. Now, this issue has been building since prior to COVID. COVID certainly hasn't helped with the back and forth as to the blame game on where COVID came from or how it came about. But here's just another step in that issue between China and the US. So we don't see that issue going away, and we'll continue to manage that. As we mentioned, the protests over George Floyd's death threatens more coronaviruses. And as you mentioned, part of the recovery as it can stall the economy, not just from the damage, but from people focusing on more important issues than shop and retail. We talked about the retailers and the restaurants with the ongoing protests. It's obviously a continued issue. If you follow the tech news, SpaceX, which is Elon Musk's rocket company, did a very historic and first launch to dock the space station, delivering a live crew to the space station for the first time. And of course, this is the first time a NASA manned NASA venture with a commercial company has taken place. So this is going to open doors for future, whether we talk about tourism, development. Obviously, in the recent decades, the spending, NASA spending, or the global spending by governments around space exploration has been somewhat decreasing, but increasing on the commercial front. So a lot more commercial companies that will be taking on those roles for government. So very historic and successful launch with SpaceX and NASA. Other headlines again. Drivers took to the roads more with the lower gas prices. I myself filled up for the first time since February on the weekend, and was quite happy with the lower pricing at the pump. We have seen some recovery in oil, but not to the extent we're probably going to see too much increase. We should continue to enjoy that, hopefully through the summer. Well, hopefully for people who are driving, it will stay through the summer. For the oil industry, of course, not the greatest situation. The U.S. stock rebound has outpaced most of the world. Not a big surprise. They hit a fairly deep low in March. And most of the rebound so far has been in the tech sector and due to the government stimulus, which the U.S. has been very aggressive with. And of course, they're going to continue that path with the election coming up in November. We mentioned a little bit last week, we are seeing the slower recover, squeezing the smaller lenders. The debt issuers, it's getting harder and harder for them to raise capital as it lasts longer, and it looks like it's going to be a longer process, even with the reopening happening, a longer process for the economy to come back to full steam. So smaller companies, again, something we saw early on and we'll continue to see through this whole process, is that the smaller companies are going to see and feel most of the pain of this recovery. As always, we take a look at the world, where we're at. The world's hit almost 6.5 million total cases so far. The U.S. almost at 1.9, and the sadder number of 380,000 deaths globally. The U.S. is at 107. If you remember last week, we were at 100,000. So it continues to move fairly aggressively every week, every day. And we continue to watch that. So those numbers, we haven't really seen the slowdown in the countries that we want to. And of course, if we see any acceleration, indicating a potential second wave. Canada, we're still shy of the 100,000 of total cases, and about just shy of 7,400 total deaths. With the East continuing having the biggest problems, the West or BC doing very well. So let's take a look at the markets themselves. Wall Street in the U.S. had a stronger week last week, or at least positive week last week till Friday. We saw a late session reversal of a positive morning, driven by Trump said he was going to come out and sign the executive order against social media. And at the time, no one knew what that was going to mean. So we saw some companies like Facebook getting hit. And we've also saw the overall markets go down because he did also mention he was going to talk about China trade. So again, those two pressures continuing onto the market. We saw the U.S. dollar fall slightly, and oil rose a little bit. Also, gold edged up, but we'll take a look at those individually here in a moment. In the U.S., we continue to see economic news come out just as the second quarter moves on. Personal consumption expenditures fell 12%. Again, no one was out shopping. Everyone's staying at home. We're probably seeing May have very similar numbers, if not maybe even deeper. Personal income, we haven't got the numbers completely out, but the estimates in are about 6.5% drop. It might actually be deeper than that in April, as the unemployment numbers are not exactly transparent, as people continue to have trouble actually getting through to the unemployment, either website or phone to apply. So we haven't seen the complete depth of that. And even though we have seen some rehiring started, it's at a bit slower pace than expected. So we should see those numbers probably a little bit worse than the expected numbers. The consumer sentiment index is all the studies are showing that it should be around 74, and it was 73.5, or 73.7 earlier, which means people are getting a little bit more optimistic as the reopening happens, and if that trend can continue, that hopefully as we go into the later part of the summer, it'll probably be fairly bumpy through the summer, but as we go through the later part of the summer, we can see improvements there. Citigroup is their CEO speaking this week at the annual Strategic Decision Conference. And what we're hoping to hear there is just a little more insight on how the US banks were directly affected and how they're dealing with write-downs. So write off bad debt or bad loans. So the banking sector, both in Canada and the US, has lagged a little bit behind the recovery. And most of that is just due to lack of information. So we are looking to get a bit more insight out of Citigroup this week. Top news, as we've mentioned, of course, the social media executive order that Trump signed. U.S. airlines are rolling out more options to try to avoid extra layoffs. They're offering retirement packages, voluntary leave, just to try to limit as much impact on the employees as possible, which is a good thing. GM and Ford, as they go back to work, are instituting fast pay for their suppliers, especially the smallest suppliers. And that's in order to get them cash in their hands as quickly as possible, and to mitigate the impact of the shutdown for them. Dollar chain stores are expected to have robust numbers, as shoppers have been bracing for the recession, looking for better and more affordable deals on things like food and essentials. And that's fairly normal. I actually once heard, I think it was Warren Buffett who said that when he's worried about a recession, he drives by the dollar store and Walmart and counts the number of Mercedes that are parked there, and the more and more Mercedes that are parked there means the higher likelihood that the recession's still going to last a bit longer, as people, even of greater means or wealth, are still shopping for the more affordable items. General Electric's cash flow forecast was disappointing, and this was mainly due to their avionics division, with the planes being grounded. Obviously, the parts and engines that they build for that industry has been basically turned off. So we'll see that from any technology company that services the airline industry. In Canada, investors are bracing for more earnings decline, higher provisions from the Canadian banks. So we talked last week that the Canadian banks were reporting, and the first one was Scotia, being slightly higher than expectation, but most of the other banks came slightly lower than expectation. And a lot of this was based on the provisions for loan write-offs and financing that they had to do to offset some of the company's cash requirements. Not pretty normal, as we mentioned, even through 2008, 2009. financial crisis where this also happened. The Canadian banks held their dividends strong. So we still have a lot of confidence in that, although Laurentian Bank is indicating they're going to cut their dividend, Laurentian being one of the smaller ones, but the big five, we are expecting to continue to hold theirs. Also in Canada and BC specifically, the Huawei extradition court ruling came out where the courts ruled that it would continue, that they would not, basically the ruling was that the accusations of the US would be against the law here in Canada, so that is in favor of a possible extradition. So there's no throwing the case out and sending her home. She will stay here in Canada until extradition process continues, which of course puts more pressure on Canada and US relations, Canada and the Chinese relations, which were already strained as our relationship with the US. Strategists are lowering their sights for the Canadian TSX for 2020 and into 2021. And this is the same as we saw the strategists talk about in the US and globally. Not a big surprise there, and especially with Canada having such a big part of our GDP and our economy based on the energy and oil sectors. Urban Oil, if you're not aware from them, you're not from the Maritimes, my home province of New Brunswick. Urban is kind of the Amazon of the Maritimes. So I think I have about 7 generations of family members until mine. None of mine have, actually that's true. My sister worked for Urban Oil for a short period of time. So most of them down there have worked for Urban at some point in time. They've announced that they're going to be buying North Atlantic Refinery, which is the owner of Come By Chance Refineries out of Newfoundland. And this is when we talked about oil, that we're going to see a lot of consolidation of oil companies. Some that are struggling with these lower oil prices, and others that will be able to wait out this marketplace. On the exchange side, the US dollar was weakening a little bit at the end of the week and fallen again this week as the coronavirus reopening starts to happen. This is fully expected. There was a flight to safety during the biggest part of the fear as we went through the shutdown. The US dollar is often seen as safety, as sometimes as gold. And we saw strengthening in the dollar. As that starts to ease, as the reopening happens, we'll see the US dollar slightly weaken as it moves along. We're still seeing US and China tensions, which is also putting pressure on the US dollar as well. The pound remained weak as the Brexit negotiations reopened. Obviously, that was something that existed last year. And a big concern of ours last year, and it continues to look like a last-minute Brexit deal. The UK doesn't look like they're going to look for an extension, so that'll continue to put some pressure on the pound and the UK markets. Canadian dollar rose to 74. That was this morning. It touched on it, bouncing around there yesterday. I think it was 73.47. So roughly where the Canadian dollar is. So a bit of strength as US dollar weakens. And that's also a bit on the oil coming back up a bit. But the general trend, unless oil really recovers, it will be the Canadian dollar will likely weaken again through the summer. On the commodity front, as mentioned, oil last week was flat. It was up slightly this morning. Now, keep in mind when we say oil is up, it's still off roughly, I think the last number I saw was 42% pre-COVID. So keep that in mind. 37 is obviously a lot healthier than the 24 it was a couple of weeks ago, and the negative number it was at the beginning of May. But still, there is still a lot of pressures around there. We're seeing the OPEC conference coming up, trying to maintain the cut in supply because there is still a massive surplus of supply, and we're seeing some of the non-OPEC countries, such as Russia, putting pressure on. They're not keen to extend the cuts until the end of the year. They want to start increasing supply in the next 1 to 3 months, which of course would put more pressure on the price of oil. So not out of the woods on that front. And we did see a slight bump up in gold last week. So just also to look at the month of May as a whole, as a synopsis here, Canada's major indexes were higher for the month of May. We'll get into the broad index. The biggest gain was the venture index, 17%. A lot of that was around the gold manufacturers, and again, plus 17%, but off of big negative numbers. So a bit of a bounce back as gold has shown the strength in the last couple of months, but still an overall negative number. U.S. indicators were higher as well, led by NASDAQ, which is predominantly the tech companies. As we've been talking about for the last few weeks, tech is doing very well out of any of the sectors. We also saw some European gains, DAX, which is the German index, gaining roughly the same, again, after a bigger drop than most. Asia, Nikkei was the largest gainer with 8%. And we've also, as I mentioned, a bit on gold and oil bouncing up. Now, oil bounced up 81%. Keep in mind, it dropped to minus 30, I think it was $34 or $37. So it went from 50s, call it mid 50s dollars to minus 34, and then back up to 37. So the gain number looks great, but that's also off futures. So unless you have storage facilities, that would have been a very tough trade to make. We saw the mining index move up. Gold, as I mentioned, and base metals having a positive move as well. Overall in Canada, a decent gain, 2.7% in May for the overall index, mostly led by technology, some consumer discretionaries. Again, those are the areas we've been focused on. Healthcare is moving up. That's mostly based on pent-up demand as people surgeries, treatments, medications have been stalled during all this. As people start to get back into things, we're definitely going to see a push on healthcare as the backlog gets taken care of. Consumer staples, 4.6, energy 3%, industrials 2.3, as they're just starting to reopen. Materials, those are your metals, and raw materials, 2%. Again, as the supply chain slowly starts, we'll look for improvement there. Telecoms haven't moved too much, 1.8, but they didn't take as big of a hit, so not surprising. Financials, as I mentioned, taking a lot of write-downs, so they haven't had as big of gains and bounce backs, but we still like that area. And again, utilities held in strong, so not a big jump back from not having such a big loss. And they also pay very strong dividends. So that's what we saw in Canada. In the US, the Dow Jones 4.2, NASDAQ, we mentioned 6.7. S&P, which is the broader US index, 4.5. Russell, which is their small cap or smaller company index, 5%. Again, off a bigger drop. FTSE, which is the UK, 3. We mentioned Germany, DAX, France, 2.7. The world overall index, 4.79. Nikkei, which is Japan, having a big recovery. And of course, Hang Seng and Shanghai, which is your Hong Kong and China, into the negative with everything that's going on over there, both politically and also that slower than expected recovery. So that's it for this week. Hopefully you enjoyed it. I did want to point out we did do a deep dive into REITs, Real Estate Income Trust, last Friday. You can find that on our YouTube channel. It's all about, as I mentioned in these videos, the REITs were hit hard and they bounced back, although probably not warranted. Do take a look at that. And of course, this week's Friday deep dive is going to be everything in the benefits that people can see, the CERB benefits for seniors, for companies, for students. We're going to take a deep dive into what's out there, who can get it, and the pitfalls to be careful if you do claim them, especially for business owners and individuals, of what to try to avoid or how to make sure you protect yourself, because those legislations do have a lot of penalties in there if if you get it by accident or by fraud, and don't take action immediately. So if you want to watch that, you'll see that on our channel on Friday. And as always, if you have any questions, reach out to us, mikeonmoney.com. Any ideas you'd like us to see in these live presentations, but also in the Friday recorded presentations. If there's any concepts, ideas, or information you'd like to see, always reach out to us. We're always happy to hear from you, but also helps us put together content that you're looking for. With that, take care, stay safe, everyone, and we'll talk to you very soon. Thank you, and goodbye.